Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be taking a look at Ether, and that's all we're going to be looking at today. I'm probably going to spend the week looking at a couple of other altcoins as well, purely because we're finally having some significant move at the moment. Nothing really to write home about yet. It may be the start of something bigger, it may be a temporary correction. We're going to try and look at some ideas today about what they are. So first thing we're going to do is we're going to have a recap of our current count, then we're going to look at an alternative. We're going to include some basic technical analysis in the video to help us figure out what's going on as well. And yeah, that's about it. So let's get started. We're on the hour time frame currently in log scale. So I'm just going to come out to the day time frame. Now this is a very busy count, obviously on the daily time frame. Try not to be perturbed by it. I'm just going to add these recent ones into the main count folder. I do have a simplified version which we'll come and have a look at to get rid of all this noise. Okay, so just a quick recap. I believe, and we will look at an alternative. For the moment I'm still going with the idea that we've completed 1, 2 at primary degree, we've completed 3 and 4 at primary degree, and we're in primary 5 having completed an intermediate 1, and now what I think is likely a minor 1. Now I have to admit that the alternate count I'm looking at is starting to take precedent in my mind as more, well, not necessarily more likely the case, but I'm starting to consider it more and more, and it may well become the primary count as price develops. But before we look at that, we're just going to zoom in and look at the more recent price data, and we're going to bring back our complex count for that, and I'll show you what I've basically got at the moment. So let's just zoom in on all this here. So let's come back down, let's come down to the 2 hour time frame for the moment. Okay, so off of the low back here in the 22nd of June, I think we came up here in 5 waves and put in a minor wave 1, 1, 2, 3, 4, 5. Actually, I've got an expanding pattern here, so 1, 2, 3, 4, 5, 1, A, B, 5 waves down into a C for a 2, and then from there we've come up 1, 2, 3, 4, 5 into a 1, intermediate degree, A, B, C into a 2, an intermediate degree, and we do have a bearish count to look at as well before we go. Obviously, I mean, we have to consider all options. This could be a top, a major top, or it could just be a temporary pullback, and then we have 1, 2, 3, 4, 5 into a 1 at minor degree, and perhaps an ABC that's now underway, maybe even complete. Not quite yet, I don't think, but it could be. So that's essentially where this count suggests we are, and I've got a bit of a funky ending diagonal to deal with here at the end of this, in the 5th wave of this wave 1, and because we've got quite a lot of overlap, overlap here, and we've also got overlap, well, no, not quite, we haven't got overlap there, that's okay, which is a little peculiar that we don't get it, but I can't really get this to work as 5 waves. I mean, I guess as not as an impulse, I guess you could say 1, 2 here, drag this back to here perhaps, and then say 1, 2, 3, 4, 5. If this was a rising wedge ending diagonal, contracting ending diagonal, one would expect the 3 to be smaller than the 1. So let's just inspect that for a moment and see if that's the case. Yeah, if that was the case, the 3 would be smaller than the 1, so the 5 should also be smaller than the 3. Continuing the contracting theme, so let's give that a look and see if that's the case as well. Oh, bloody hell, that's close. That's really close. We're going to have to be super precise. magnetize it. Yeah, we're going to have to zoom in on that. It is smaller by Nat's cock. But that's all it needs to be. It's smaller, so it is a contracting ending diagonal. So, does the subway structure support it? It's not that clean, to be honest. We seem to have, I mean, maybe 1, 2, 3, 4. I mean, it's difficult to get an ABC in here. You can get an ABC here, ABC here perhaps, ABC here. This is tricky. This could be 5 waves as well. So I'm not 100% sure there really. And I don't think this is an expanding pattern with the top here. So I'm just going to leave it like that for the moment. But it's also viable to suggest that it's actually a very small 3, a very small 4 here, and a very large 1 and 2, and then a very tight contracting pattern into the 5 is also possible. But that's very extreme. We do get a zigzag here for an ABC. ABC here is still a little dodgy, but we could probably pick out a small ABC in here. So I'm not quite sure which I prefer, but we've got overlapping and it's a bit difficult to pick out a clear, pick out a clear impulse. Same with this area here as well. I had considered a diagonal here, 1, 2, and then 1, 2, 3, 4, but then we got overlap again. So it's just a bit tricky near the top here, but either way, it's likely some kind of diagonal. Okay, that we work our way up into here. Since then, we've broken down in what looks like 3 waves so far. Whether or not this is complete and has got further a lot to go, we can come and have a closer look in a bit. But the first thing I want to do now that we've looked at the count is I just want to get rid of it for a moment. Now I'm going to intersperse the Elliott wave analysis with some basic analysis as I go, as I think sometimes just leaving it all at the end of the video can sometimes throw people off a little bit. So we're going to get into the habit of using it more frequently during the video. Now, which trend lines are these? Okay, so let's just throw these into that count folder here, switch them off. Alright, so one of the tools I've recently come back to using, and I used to use it a while ago in my analysis, but I haven't gone back to it until recently, and I can't remember why I stopped using it, because I've been playing around with it for the last couple of weeks now before I brought it back to the channel, and I've come to appreciate just how strong a piece of TA it is. So I'm not quite sure why. I think maybe when I was going through my readoption of Elliott wave theory, I wanted to focus on, you know, following the theory closely, and also my own forms of helping me confirm wave degree rather than looking at other forms of technical analysis. But I've had the time recently to start considering some other ideas, so I've started using the regression channel more, and I just want to show you how accurate this thing is as a tool. So obviously here we can identify a uptrend series of higher lows, right, and a series of higher highs, obviously, and there's a pretty narrow range as well. Now if we take our regression channel, we're just going to put our magnet on here, we're going to come right down to the bottom and we're going to come right up to the top, like so. We're going to come off of log scale. So there is a little bit of overthrow in a few places, but that's fine because all this represents is 1 standard deviation from the mean. Okay, so what we're seeing here is, sorry, 2 standard deviations from the mean. So this should capture 95% of price swings in theory, with the final few percent falling outside of that into the 3rd standard deviation, or even beyond the 3rd standard deviation. But we know from our standard deviations from our standard distributions, that's 68%, I think, 60, I tell you what, bear with me one moment. Yeah, I should know this as I'm always doing distributions for odds and distributions calculations, so I don't know why my brain's just gone blank. GS distribution. Sorry, 68.2% is 1 standard deviation, 95.4 is 2, and 99.8 is 3. Okay, there we go. So that's what I was trying to say. So essentially, any little extremes you get outside of here are just beyond the 2 standard deviations from the mean, and the red line's the mean here. So as you can see, this is an incredibly tight little range we got going on here, and it's traded very neatly within it. And now we've broken it. Okay, so this is likely the completion of a wave degree. So if this is 1, and this is 2, and this is 3, and this is 4, and this is 5, then this is now a 1. And now we're working on a 2. So we can expect a similar kind of pullback as we would for this one and this 2. So let's just have a look at this for a minute, and let's do the same exercise over here. Let's take our pivot that we were using as a 1, 2 from the very low, if I can get it, bear with me, and straight to the high, bear with me. It's just not quite letting me get that. Let me try that again. There we go. Okay, and this here. Right. So this one is not as neat, but it's a much bigger range. This is much narrower, this is much broader. Okay, and we're saying this is 1, 2, 3, 4, 5 into 1 intermediate degree, large correction here. Now the correction we got from there, I'm just going to use the magnet to pop it right on the top, almost 61.8 in linear scale, almost, not quite. Let's just pop this down to the very low wick here. Okay, so just shy of the 61.8, so just shy of the golden ratio. Let's just bring that back, get rid of some of this noise. So we come through the 50 and make a run on the golden ratio. So this is quite a significant pullback. We have what appears to be a narrower range. So I think the assumption of, you know, let's tell you what, let's get this in. Turn that bloody magnet off. The idea of this being 3 now and this being 4, I don't think is right in terms of these 2 wave degrees being related to one another. If we just stay in linear scale for a moment and we just take the length of the 1 and we project it forward in time, we find that the 3, if this was a 3, doesn't even make it to 100%. Now that's the same idea if we were talking about the bearish idea of A, B, C. So if this was A and this is B, right? C hasn't made it to 100%. Now we would expect it to do so, and it hasn't. So that's in itself interesting, I think. Let's just get rid of these brush strokes. Okay, I've got another couple here apparently. Try and keep the chart tidy. So looking at the scale and the range of this and the size of this pullback, I'm expecting, having had such a narrow range here, a pullback, but not as significant as this one. Okay, because it should be at a smaller level. Now it might correct a significant amount of this uptrend here if it is another 1, 2. It's a very extended one, I will say that, where you've gone 1, 2, 1, 2, but it could be an extension in the one of the 3. Okay, that's possible. I would have expected to probably see 1, 2, 3, 4, 5, 1, 2 like this. You know, here's the previous wave 1 high, here's the previous wave 2 low. So going 1, 2, 1, 2, you'll be far more familiar with that kind of extension leading into an extended 3, right? You'd be more common to expect that initial minor wave pivot, intermediate wave pivot. The pivot of 1 less degree you would expect to be a little closer of a larger pivot than this, which is pretty high up, pretty extreme, but it is possible. So there we go, we seem to have a wave degree here of one scale and a wave degree here on one scale. So that supports the current count I'm working with here, which is 1, 2, 1, 2. So now that we've looked at that, let's look at what we've done so far, what we've pulled back so far from this move up. So treating this as another 1, 2, what have we done? Okay, so we've done very little so far. Let's just see. Let's pop the 38.2 on here. Let's pop the 23.6 on here. Let's take the 23.6 off. We've gone through that. So we haven't pulled back 38.2% of this up move yet. We haven't got anywhere near 50, and we've got nowhere near 61. Let's just pull back and see what kind of profiling we've got going on around these levels. Okay, so currently we've got this peak in the volume profile. This seems to be current support at the moment. We've just bounced and we've come up a little bit, but I think this is likely a third wave. This is likely a 1, 2, 3, 4, 5 with another push down, I think. We'll come and have a look at the structure on the smaller time frame. We've got some peak in the volume profile around the 50, got a real divot between that, and then we get into the golden ratio and everything around here, which is all this previous noise here. So I would not expect such a deep correction. If this is 1, 2, extended 1, 2, I think 50 around there should really be about the limit. It could come deeper, but then let's have a look at what kind of size correction we'd be getting overall. You know, if we came down to here, from the current pricing, that would be a 22% correction. The correction back here, this was a 34% correction. So yes, you can pull back to the 50 and still have a significantly smaller correction. So you could have, you know, a larger wave degree correction, a smaller wave degree correction that's still significant, supporting the idea of 1, 2, 1, 2, minor, intermediate, minor. Right then. So far, I think we've got some evidence to support the current count. I'm not sure. We'll come in and have a look and see if we can make any sense of this, shall we, while we're here, before we go and consider an alternate. Okay, so maybe that last swing was just A, B, C into here. Very long A, very short C. It's a bit funky. I do prefer 1, 2, 3, 4, 5. Prefer that as the final swing into the diagonal. So how would that fit? 1. It doesn't really work, does it? It's got this in the way. Yeah, that's still messing me up a little bit, that is, to be honest. Okay, let's come down to the 15-minute. Let's come all the way down to the 5-minute here, because we're going to need the meltdown. The little meltdown here came on so thick and so fast that let's move up to the top. Yeah, so this initial move came on so fast, it's very difficult to pick out wave structure. So we're either saying this is a 5-wave move to here. And then this is 3 waves. We don't make a higher high though, which is a little peculiar. So this is 3 waves to here. And then this is 1, 2. Now we seem to have a triangle for a wave 4. So this is definitely completed 5 waves down here, right? So okay, so let's just ignore the structure we can't quite figure out for the moment and let Elliott wave tell us something for certain. So we have got something for certain here, I think. We're just going to come in and double check it to make sure it's not lying to us. Okay, so this does look like a triangle. Okay, so A, B, C, D. Let's, if we come down here in 5 waves, 1, 2, 3, 4, or Is that 1, 2, 3, 4, 5, 3? Oh, that's horrible, isn't it? See, this is the problem when you get these kind of moves that just waterfall, because we get this like curving here into like a 1 and a teeny tiny 2, which retraces absolutely bugger all of the previous move down. Then we just waterfall. Then we get a triangle. Then we get another waterfall. So, you know, really aggressive selling going on here over the shorter time frame. Not exactly your meandering sea wave, but then sometimes they can be pretty severe. A, that's 3 waves, right, into an A. Bum bum bum, that's 3 waves into a B. 1, 2, 3, C. 1, 2, 3, D. 1, 2, 3, E. 1, 2, 3, 4, 5. I think that's the best you're going to get looking at this as triangles. So A, B, C. Well, maybe that's 3 waves now. Take the low. Take the dominant low. Always take the dominant low. And the dominant high. Don't try and force it into a lower high or a lower low if you don't need to. Just take the dominant swings. If it doesn't fit because you can't find the wave structure within the dominant swing, then you can consider moving to a higher low. But truncations are rare and weird things. So generally you should always look for the dominant high, dominant low, dominant high, dominant low, dominant high, dominant low, rather than any of the alternate potential finishing positions based on subwave structure, which could be very misleading. And on that note, this would have to therefore be a 1. And the 2, very deep 2, but it is legit. And then in here is rushed a 3, 4, 5. Okay, that's about the best you're going to get. From here, you appear to have... Let's just check this movement off of the low. Around 38.2. This movement off of the low is around 50. Is this 3 waves? Is this a zigzag? Alright, well if this is a zigzag, then it's likely it could already be over. You could have gone A, B, C, right, and then this is 1, 2, and we're going to accelerate again. Right, so that's one option. But whatever we've done, we've completed 5 waves down here. Right, we've completed 5 waves down here, so let's consider that for a moment. Now I can't, like I said, I'm not going to stress over trying to make... I'm not going to stress over trying to make sense of this initial move down. This is a dominant low here. This is dominant high. This is a bit confusing because this looks like 5 waves to a higher low, doesn't it? It looks like 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. W with a truncation, don't like, but it's possible. W, 3-way swing with a flat into a Y, so we don't get a zigzag, we get a flat pattern. Does this retrace 90%? Interesting question, let's just check it. No, it does not, so I'm not going to consider that a flat, that's a zigzag. This could be a flat, it could be a combination. But then this looks like 5 waves all day, doesn't it? 1, 2, 3, 4 with a triangle, 5. Could you say 1, 2, 3, 4, 5, A, triangle B, 5 waves into a C, W, why am I saying F? Sorry. Having a moment. X, Y, you twerp. W, X, Y. Pretty, you know, funky combination going on here with a flat for the X wave instead of 3 zigzags, but that's fine. We can live with a flat, we can live with a triangle. This could be 1, 2, 3, 4, 5 with a triangle in the 4, or this could be some kind of B wave triangle in a final zigzag. I'm not particularly convinced either way, to be honest. Alright, so haven't made it to the 38.2. What's the relationship between these 2 waves looking like? Now we don't need this anymore, we've already identified that as a triangle. So let's take the proposed W or A Let's take the proposed X 1618. That's pretty steep. Yeah, is that enough to be considered a free? Let's just pop the invalidation point on this wick. If I can get it. There we go. 2, 3, 4, 5. It looks like 5. That does. There's no use to me at all. Okay, sorry. I'm just thinking. Having a think for a minute. That's pretty extreme. That extension is, right? But it's still a long way off of being the 38.2. So could this be a zigzag of its own? So we could say, you know, the problem is, right, you're going to always be in a hurry to get the correction over with. You're going to always be in a hurry to get it over with because, you know, you want to buy again, don't you? You want to see a bullish opportunity and you want to buy again. But the thing is, like, this has been going on 5 days, almost 6 days. Let's just come out to the 1 hour. Whereas the actual move up to this height took 49 days. Seems a little extreme to expect it to be over within 6 days. Not saying it's impossible. It could be a very sharp and sudden and quick wave too, but that's very, very quick. That's 10% of the time it took to get up here, which is very, very fast. I don't like that idea of a truncation there. So if we say A, can we get a triangle? No, can't get a triangle in here. No way. W, X. So you can't get a zigzag in here clearly. So I'm tempted to say it's either A, B, C complete. We'll look at a bearish option in a minute, which could be the beginning of a much more aggressive move down. It's either A, B, C, or it's A, B, C, W. And then bump, 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 X, bump, 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 Y. So you'd have some kind of 5, 3, 5 into here, zigzag, 5, 3, 5 into here, zigzag, like that. And then that would still give us a smaller correction than this intermediate wave correction over here. It would still take less time than this intermediate correction. It would be a more significant amount of time relative to this entire move up. So maybe we're shaping up for a double zigzag. The thing about these double zigzags, I'm not saying it is, but the thing about these is they tend to force bulls back in before the market's ready to accept the bid. So what you get is like this move and everyone's like, it's 3 moves, it's complete, let's go. Oh look, we're impulsing. And then down we come again. Yeah, and it's like a liquidity trap. It's a bull trap, drags in some bulls, and then we sell off again. It could be over 3 waves already, but I just think it's a little too quick. And to be honest, for me, since I've become a bit more of a hodler over the years, I will take trades, and I still do. But you know, it's not enough for me yet. We haven't even retraced 38.2% of this current move up, and if we make it down to 50%, I'll consider it. Yeah, if we make it down to 50% of this move, I'll start considering it, but I'll still want to see everything else I want to see. So on that note, let's have a look at what's going on here with the RSI. Let's come out to the daily for the moment. Okay. Let's zoom into this lot over here. Alright, so alright. I'm just trying to see if there was any significant divergence over these last 2 highs. There was divergence here between these 2 highs. Okay. So divergence between those 2 highs, which is this high back here and the high before we started to break down. Not really the same story in the MACD here, kept pushing very mild divergence at the top, if any at all, really. So more of an honest reading of momentum here, and this isn't any real significant divergence to write home about. It is there. Move down into neutral territory in the RSI. Sell signal recorded here on the MACD. Crossover of the average through the signal here. Big thrust down acceleration, big red bars in the histogram. We've had declining acceleration here. As momentum has continued to climb into positive territory. Momentum has been positive, but like I explained in the way I interpret the MACD in a recent indicators video, and the way I explain how I think of the histogram relative to the actual move or the recorded move in momentum. So this is like just taking your foot off the gas, okay, as we climb. And this is like putting your foot on the gas as we fall. Okay, and this is taking your foot off of gas as we fall, and so on and so forth, and thinking of the histogram, recording it like that. So we are still at the moment we are still in a thrust down, the MACD is saying here on the daily, and until we start to see smaller bars recorded on the histogram here and any sign of curving, then it's likely just a short-term counter trend move before continuing lower. We can look to smaller time frames to give us clues, but on the daily time frame, which is really the one that matters, there's absolutely no sign at the moment that this is anything other than the start of a correction rather than its conclusion. Well above the zero bound here on the MACD, and still well above oversold conditions on the daily. So if we come down to the 4 hour, now on the 4 hour you can see how we've gotten well below the zero bound on the MACD, and we are starting to take our foot off the gas, so to speak, with a lighter coloured bar here, and starting to just curve the average. Right, and also on the RSI, we've come straight down into oversold. 4 hour chart here. Now see, we didn't have that divergence on the, oh yeah, we did, slight divergence on the 4 hour. Come straight down into oversold conditions, so we're going to rally in the short term, and that's what we're doing, but it could just be temporary before pushing higher. Temporary before pushing lower, temporary counter trend move. We might come up a little higher, maybe we've done that W, maybe the ABC into the W, and then we're going to put up a counter trend move for the X, and then we'll get the Y, which would help then start to cool off the bearish momentum on the daily time frame, which is still very aggressively pointing downwards. Still in positive territory though, so it's not by any means guaranteed we'll come back for the zero bound here, but if we have completed a 1-2 and move back to oversold would be perfectly normal under these circumstances, so we'll have to wait and see. Okay, right, what about, we've already looked at the volume profile and the Fibonacci retracements, haven't we? Let's just bring up the volume for a minute, see what we can see. Volume during this whole rally has been suspectly low, hasn't it? On the daily, we come zoom in a little bit. We've had a slight increase here, signifying likely the temporary crescendo of the selling. It could be the bottom, like I said, ABC, but it's not that impressive. Let's come back down to the 4 hour again. Yeah, so we had an increase of volume as we came into this selling phase here. We may have peaked in the volume, now we're declining. So we'll look at the 2 hour. And yeah, so declining volume in a counter trend move. That's likely what this is. This is likely a downward trend now and a counter trend move before we come down a little lower. How long this is going to last? It could be that X wave, it could just be temporary before thrusting lower again. Right, so now that we've done all of this and we've spoken about our primary count, let's take a look at our moving averages here as well. What have we done moving average wise? We have come straight down to the 60. Well, not quite, a little higher than it, through the 10, through the 20, 10's curving over now. Likely going to cross over the 20, heading for the 60 for the support. So this could prove support. 250 is still a long way below. Wouldn't expect us to come down this far, otherwise we're looking at something completely different. Completely different. Okay, so now let's consider an alternative count. I'm going to save these regression channels, I like them. What was this? 1, 2, 3, 4. Oh, that was the idea of a potential 1, 2, 3, 4 and invalidation of the wave 4. So I'm not really comfortable enough with what's going on here to really start guessing at that. So let's look at, where are you? Alternate count. So this is a very bullish count. A very, very bullish count. Much more so than the one we were just observing. So let's come back to the weekly here for a minute and put this into log scale. Auto the chart. So I've been looking at this and I've been thinking this could be what's going on. So cycle wave 1, cycle wave 2 to here. So now before, what we had was primary wave 1, primary wave 2, and this was cycle 1 and this was cycle 2 here. And then we went 1, 2 into primary. I'm just considering that what we actually got was a truncation in the Y wave here. And that we've got a zigzag, and a zigzag for a WXY. Now, you can count this as 1, 2, 1. Sorry, I think I think I counted this as a leading diagonal. Let's just have a look in the 1. So what did I do? I went in my bullish count. I went 1, 2, 3, 4, 5, 1, 2, diagonal, and then 1, 2, 3, 4, 5, like that, to get into 1, ABC into 2. But it's not pretty. There's a lot of overlapping here, so unless you force that diagonal, you get a lot of overlappage. So just considering the possibility that all this overlapping noise here, if we come into the daily time frame, it looks much worse. I'll show you what I mean. Come into the daily time frame here, all of a sudden these look like much more significant peaks, and it's much more difficult. So here I've got an A, B, 1, 2, 3, 4, 5 with a lovely clean impulse for the C with no overlap. 3 wave flat, running flat for the B with 5 waves into the A. Now this looks much cleaner to me. Much cleaner than trying to force this into a diagonal. So maybe the cycle 2 wasn't here, this was a W, then we went X, then we went 3 waves into a Y, and then we started impulsing. So from here, the wave degree is all down to, your moon boyishness, I guess we could say. We could say this was a primary 1. But if we look at how short this time frame, this move was, it really was a small correction, really, really small correction. So if this was cycle wave 1, 2, okay, if this was cycle wave 1, 2, does this look like a primary wave degree to you? If this was primary, this is supposed to be one wave, one lesser degree than this, and it doesn't look like that at all. So what I've done is here, making this assumption for the moment in this count that this is WXY, I don't believe this could possibly be a primary wave correction, so I've said intermediate. So you can see the issue we're dealing with now, which is if this is intermediate wave, we've got 3, 4, 5 intermediate degree before we put in a primary 1. Okay, before we put in a primary 1 of cycle 3. So this is stupendously bullish, like just crazy bullish. 40 grand Ethereum kind of bullish. Okay, tenfold, 10 times from here, potentially more. So don't run away. I don't want to run away with the idea that we're being uber bullish here. I'm just pointing this out as a possible alternative. So if this was intermediate, then this now becomes minor, which means now this same 1, 2 that we're looking at here in our primary count, which is still the idea of 1, 2 intermediate, 1, 2 minor, is now 1, 2 minor, 1, 2 minute, and that actually helps if I look at it, scaling the corrections down, 1, 2, instead of 3, 4 at primary degree, 1, 2, 1, 2, 1, 2, into what is an absolute fucking beast of a 3. Just face ripper of a 3. That's just going to blow everyone away. If it's right, if this is right, and we are being a bit moon boyish, if this is right, it's just going to blow away everyone's expectations of what's possible for Ethereum. No one's going to be able to imagine how high this would go. There'll be people out there I've heard say 20. Could be. I mean, I'm not going to say any figures. It's going to be higher if this is the case. It's going to be way higher than that. So there's your alternate 1, 2, 1, 2, 1, 2, 1, 2. I've got an Uber bull count in Bitcoin which supports this idea as well, which I previously discussed a few weeks ago. So now that we've gone from our primary count into our alternate moon boy count, we should wrap things up with the bear count, shouldn't we? Okay, because the bears might be right, and we can't just entertain ourselves with the wet dream of constant bullish bull porn. We have to consider the alternative. So alternatively, we've done ABC ABC, and now we'll do 5 waves down like this: 1, 2, 3, 4, 5, C. Now it doesn't have to be there. It could be 1, 2, 3, 4, 5, C, right? And we've got a running flat like this, right? I'd expect it to come back to the golden ratio if we did that though. So 1, 2, 3, 4, 5, like that. So that would suggest that the 1 isn't even in yet. And whatever we're seeing with the completion of 5 waves down here is maybe a 1 of a smaller degree, or maybe a 3 of a smaller degree. So if we just remind ourselves what we saw here on the 15-minute chart, we saw this triangle. And there's absolutely no way it's not a triangle, right? Because the last wave results in a bounce higher back into the same price territory. So this has to be 3, this has to be 4, and this has to be 5. Right, the only alternative is that it's completed in a single move, and this was part of an A, B, very small C for a WXY. Double zigzag that's already complete. I think the time frame's just a little too optimistic to expect that. So I think it's more likely this is 3, this is 4, and this is 5. It's now a question of what? What is it a 3, 4, 5 of? Have we gone 1, 2, 3, 4 is going to come in below this invalidation point, 5. Okay, at that point it's 1, 2, 3, 4, 5 of our in the bearish count we're in, remember, it's 1, 2, 3, 4, 5 of 1. Then we're going to have a time consuming 2, okay, taking us out further. Then we're going to have 3, 4, 5 down into that golden zone. And that completes a running flat. Now, bloody thing, it could be way more bearish, right? It could be all the way down here somewhere, okay? To get this 3, 4, it could be an expanding flat. Let's just clear all this off without making such a sodding mess. Right, there we go. So it could be ABC, ABC, 1, 2, 3, 4, 5. How do we know? How are we going to know that? Well, you'll know when you know. I mean, we don't have a crystal ball. I would argue that the scale of the correction, time and depth is going to be the giveaway, right? Because in the bullish count, we've seen this as intermediate, right? We've seen a smaller range in price than this, and now we're seeing a correction. So we're expecting a smaller 1, 2. If over the coming weeks, days and weeks, this morphs into something much more violent and larger, we're going to have to say this is more likely 1 and 2 than it is ABC, because now we're starting to take the piss out of this. Okay, and therefore the bullish idea is losing credibility. I'd also expect, obviously, if that's the case, you should not be retracing more than 50 to 61.8% of this move. If we were, that would also be a sign that this is probably more bearish. you're going to need to look for reversal conditions on the daily time frame. Okay, we're only just turning negative here, so we're a long way off bringing this average back up and over the signal, wherever that comes. You want to see small, you want to see the foot coming off the gas here in the histogram on the MACD. Alright, which we haven't seen anything of the sort yet. We've only just got into this thing. Potential thrust down into oversold conditions here on the RSI. So early days. There's no way I'm rushing into this yet. Like I said, give me 50% down, 61.8% down. I'll consider adding to opening a trade here. I've already accumulated the hell out of this. Alright, so another opportunity to accumulate for me is going to have to give me a significant discount. And if we are going to come down, to a significant level, then I'm not jumping in. You know, I'm not just going to go hit the 50 buy. I'm going to wait till I see some kind of impulsive move and pull back. That is supported by momentum in the RSI, supported by the MACD, right? Supported by volume. Okay, and giving me all the confidence I need that we've bottomed. At the moment, I think jumping in now, you're just guessing. And if you're chasing pivots of 10% or less, that's up to you. If you're day trading and you want to time that and you pull it off, good for you, but it's not for me. I've explained that in my recent video. I want a bigger discount than this. I want signs of a completed correction and the beginning of a reversal or a continuation of trend. I don't see any of that yet. I think we're still in early days. It's either complete, a very shallow 1-2, or it's the first 3 waves of a larger correction. Right, that is still going to end up smaller than this one. That's the bullish count. This bearish count, sorry, is what I should be talking about at the moment. And this is simple, which is we're going to get 5 waves down at a larger of a larger degree. Okay, so if this is 1, 2, 3, 4, 5 already, we're going to get 1, then we're going to get 2, then we're going to get 3, then we're going to get 4, then we're going to get 5. Okay, and the size of these waves will depend upon whether we're doing a running flat or whether we're doing an expanding flat. An expanding flat will come down like this. Okay, and it will be devastating. You know, in terms of how much price it's going to give up. It's going to take out these lows. Now, that supports the idea of this being primary 3, primary 4. Large correction and our initial count, but with a bearish completion for the 4 here rather than the 4 being back here. We get a long-winded 4. Now, if that's the case, then this is just another kick-ass accumulation opportunity down here. And this should be the one that you look for if you're bearish, you know, in terms of getting back in and going back higher. Right, because I say that because the idea that we've gone 3, 4, 5 is bullshit. To me. Alright, I might be wrong. And I'll apologise if it turns out a few months' time that I was. But I've observed the finale of crypto bull markets while I've been in the market since 2015. I've gone back and looked at the charts of previous bull markets. And wave 5s in the final run-up of the bull market in the crypto bull run do not end just beyond the fucking 3. Okay, they go parabolic, mental. Okay, that's what they tend to do. The 5 tends to just be insane. And I don't think this is a legitimate, you know, way of looking at a 5. You know, I think this is either 1, 2, 1, 2, 1, 2. Okay, or this is 3 wave swing and we're going to come down in 5. Those are the 2 options I think are more likely. And I think I'm in danger now of having... How long have I been going on for? Another 50-minute video. Alright. Sorry guys, I know it's a long time, but I wanted to cover everything. I think I have. They're the options I see at the moment. Too early to call this a completed correction. It could be on the off chance of it being very short and shallow, but I would lean on the side of it taking a little longer. And me personally would like more of a discount before considering buying again. And I'm going to wait to see how momentum plays out. And yeah, that's it really. Alright then guys, having covered the basic analysis during the video, I'm going to probably do that more often now. It doesn't need its own section. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And take care of yourselves. I will be back with you probably with another altcoin or two later in the week. Make this a bit of a crypto week this week, I think. Alright guys, take care. All the best. Bye bye. Oh, sorry, and before I go, thank you as always to my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, follow the link in the description below. Have a look at the tiers while you're over there. If you like the look of anything, please consider joining up. Alright guys, take care.